Hi, I'm Ed Heiser, your Southeast Valley Realtor, and I'm going to talk today and cover the number one question that I'm asked every single day. Or it sometimes is just reworded or rephrased as a statement, but it's, when is the housing bubble going to burst? Or when's home prices going to come down? Or I'm just going to wait to buy when the home market crashes. Well, I'm going to talk today and cover the 5 things that we'll see before prices come down. All right, remember, before you do anything else, click on that subscription button. Home prices don't just magically go up and down. So just because home prices are going up, and obviously some people don't like that, well, that doesn't mean that all of a sudden we're in a housing bubble, or that now home prices are going to magically come tumbling down. The markets don't move on emotions. The markets move on natural cause and effect factor. Unfortunately, I don't have a crystal ball to predict the future. If I did, I promise I'd let you have a peek. But I do have tools that I use that helps me look at certain indicators and the things that are in the market happening right now today, which help me determine what the market is going to do. And the two tools that I subscribe to and use are the Armless, or the MLS, the Multiple Listing Service, and the Cromford report. I pay my annual dues to these so I can use these tools, and then I'm able to glean that information and share that information with you. So with the housing market so volatile, these indicators we actually need to watch daily and weekly to get an indication of what's going to happen in the near future. Again, we don't have a crystal ball, so we need to watch these. I mean, our market is very volatile, as we all know, so we need to keep an eye on these factors, and it will give us a leading indicator so we can, with informed information, make judgments on the near future. So let's take a look at those 5 things we need to keep an eye on. Number 1 is days on the market. In the industry, in our industry jargon, we call that DOM. So days on the market, right now, days on the market are rather short. And what that simply means is how many days from the first day a home was listed until it's sold, or current today. So if you look and see a home that was listed, say, 6 days ago, it's been 6 days on the market. Now, in this seller's market with so many buyers and so much demand, obviously days on the market are very short. We are seeing days of the market creeping longer and longer. And that's a good indicator that things are shifting and things are changing. All right, the second indicator that we need to keep an eye on is price reductions. And what price reduction is, it's not that listing prices and home prices are coming down. No. Price reductions are, and I'm going to use an arbitrary number. Let's say a house is listed for $500,000, and you see all of a sudden that listing price has been changed to, let's say, $480,000. That's a price reduction. So as days in the market get longer, that motivates sellers sometimes to reduce the list price. Thus, when that list price comes down, boom, all of a sudden that encourages more interest, and then the home sells more quickly. So right now, sellers still want the moon. I mean, yeah, people sell their home to make money. So a lot of them are shooting way high, sometimes out of the atmosphere high. So we are seeing some of those price reductions happening right now. And in the market right now, between $400,000 and $500,000, that the median price reduction right now has had a 71% increase and that average reduction is about $13,000. Now in homes priced between $500,000 and $800,000, we've seen a 157% increase in price reductions. That average reduction is $16,000. In homes priced between $800,000 and $1.5 million, that has the reductions have gone up 125%, with an average of $25,000. So as I said, as the listing price reductions come down, that obviously stimulates buyers to want to buy it, and that just has an obvious effect that days on the market shrinks. The third thing that is extremely helpful to look at is listing price versus sale price. And what that is, as you can see from this chart right here, the average listing price, and this we usually use per square foot, that's $247 per square foot is what the list price is. The sales price, it's what those same homes sold for, is $253 a square foot. So that average is telling you something, that the price went up that much. So again, the market is shifting and moving, and there's different indicators saying different things. You know, in some instances the days on the market are going down, some instances they're lengthening. Price reductions are happening to some homes and price reductions aren't on others. And the average overall, the list price per square foot and the sales price per square foot, it just shows overall that prices are still increasing slightly. So that brings us to number 4. This is an indicator that I absolutely love. It really gives you the big picture, and that is supply versus demand. I mean, that's what drives sales. I don't care if you're selling boxes of Kraft macaroni and cheese, or you're selling, you know, pencils or widgets. It doesn't matter. Supply and demand is what drives value, and that's what we need to look at. Emotions have nothing to do with it. So when supply is above demand, we're in a buyer's market. When demand and supply is equal, we're in a normal market, a neutral market. When demand is above supply, we're in a seller's market. So let's take a look at this graph over the last 21 years, and you'll get the big picture of really what's been going on in our market for a generation. A generation's 20 years. So let's take a look at this last 21 years. As you can see, in this last 21 years, we've been in a buyer's market for only 3.6 years. We've been in a neutral market for only 4.6 years. We have been in a seller's market for 13 years. So for the last time we were in a normal market, that was 2014. That was 8 years ago. So for the past 8 years, we have been in a strong seller's market. Now, something I really want you to see is take a look at the quote unquote, at the real bubble that really happened, you know, 05 to 09. I mean, we had such a overbuilt market and low lending standards and such a monstrous supply. We had investors and other people buying that had no intention of even occupying the home. So we had a monstrous amount of homes sitting vacant. Well, that's a negative factors, a lot of them, that will contribute to lower home values. And as you can see, that big gap at the peak of that time, we had 59,000 homes listed for sale on the MLS, and we only had 4,000 of those sell. Well, that's why we had such an incredibly strong buyer's market that it drove home prices down exponentially. So what is our supply today? Well, right now today in Maricopa and Pinell County, we have 9,507 homes listed on MLS. Now that brings me to my fifth factor I like to look at, and that's days of inventory. We hear this a lot. Normal supply of inventory for homes in a normal market is somewhere between 4 and 6 months supply. And right now we have as you can see from this graph, we have a 30-day supply. So we still have more demand than supply. And we're going to see that for some time here in the future. I would think that that gap is narrowing and coming down quickly. That's why we have, we're so volatile. That's why we really have to keep an eye on the market, weekly, because things can change fast and happens fast. But our information is always a little bit lagging, so that's why we just have to keep a real good eye on basically all these 5 indicators, and it'll show us rather quickly what the price is. You don't watch price, you watch the market activity. Days on the market, days of inventory, demand versus supply. You need to keep an eye on these things. Price reductions, those things will tell us if the market is softening. One thing to understand, we aren't going to have 59,000 homes hit the market and only 4,000 buyers within the next month, 2 months, 3 months. I just don't see any factors that would cause this tremendous flood of supply. I actually see that we're actually going to be struggling with supply here for a little while longer before supplies and demand normal up. Just because these factors are coming together doesn't mean there's going to be an automatic price reduction. So the current market today, prices are still slowly rising. That is weakening very rapidly. Supply is increasing. Basically what all this means is we don't have the competition. We don't have 20, 30 contracts on a home as we used to. We're not bidding, $30, $50, $100,000 over list price. Things are slowly starting to come back to a little bit normal activity. We're still a little ways off from normalcy, but those that are looking for homes don't have the competition and overbidding as we've seen in the recent past. So if you have any questions about the market or anything else real estate, I love to answer your questions. Just reach out, give me a call. If you're looking to sell your home before we move to a more balanced market, click on the links below and click the resource link for your instant home valuation. If you're looking to buy a home, click on my resource link below to search the current homes on the market. I look forward to talking to you. And as always, remember, I'm just a phone call away. So the next thing we keep an eye on, can you see that cat? Mm-hmm.
Stupid mater.
Good cat, but